Welcome to GP Bullhound's Tech Thoughts. Today is the 4th of June, and we are here with Inge Heydorn and Johan Roslund for our weekly market roundup. Today, we will be covering this week's tech market, including fresh numbers from the semiconductor and games industries and the reports from DocuSign and Zoom. Over to them.
Let's start with the market view. In the last few programs, we've been arguing that the volatility is coming down and that we could once again see some recovery in growth stocks. At this point in time, and as you saw yesterday, now investors are getting worried again about the inflation. And I think that worry will continue in the next coming weeks, ahead of the CPI numbers on the 10th of June. And we also have the Fed meeting on the 15th or 16th of June. So we could see some quite a lot of volatility in the short run. That's our market take.
And we had some, we can start with some semiconductor updates.
Yes, I've been listening to computer techs in the last 3 days. It's not a live event this year, so it's a Zoom video event, and we'll get back to Zoom on that later. But the interesting thing here really is the takeaway, and we've been arguing about this for a very long time, that you have to separate the two trends in the semis. One is the cyclical trend, which is really the shortage of automotive components and some demand-driven trend. And the second trend is the high-end, the leading-edge trend. And that's just amazing and really mind-blowing how much things are happening at this point in time. And for me, it's really interesting to see the number of different GPUs and CPUs and AI chips that are on their way. And the speed, I would say, of innovation and development is higher than I've ever seen. But remember also, we're coming from a decade of really Intel setting the agenda and being, I wouldn't say slow to do changes, but not in much of a hurry as they were the dominant player. And now we have so many players getting into that. So it's really interesting. So the speed is definitely picking up. And we also saw TSMC now further, so to say, pushing their cycle of development. So pushing forward the timetable really to develop the chips in the lower end, so 4 and 3 nanometers.
And then we had some NDP numbers.
Yes, it came out last week, and we didn't have time to talk about it last week, but I just want to highlight one thing here is that April numbers, which is really tough comparison, it was up 70% year over year on the software side. Last year was up 12%. The total number was down 3% because of the hardware weakness, shortage on PlayStation, Xbox, and Animal Crossing playing a tough comps for Nintendo. But the software side was up, which is really amazing, 12% up. And I just want to put that in context that most of the gaming developers has guided for flat to single digit down in Q2. So good start to the quarter.
Interesting. And now we can move over to Zoom, the software that we're currently using. They reported this week was, of course, really good growth. The comparison numbers still in a quarter with the COVID starting last year, but not the full effect. So they almost grow 200%. I think the EBIT was up almost 9x. So impressive report in terms of those headline numbers, but we will dig a bit deeper. But first, also talking about DocuSign reporting yesterday evening. That's a company we really like, both software that is more consumer facing, the signing software. But what people often don't see is the enterprise product where you can create storage and also search for risks in agreement. So that enterprise product is really interesting, and they grow almost 60%, and this is also almost traded like a work from home play, but we think it's more sticky because no one wants to go back to print something and sign by hand. In Zoom, you have that physical need maybe of human interaction in the long run, so it's easier to see that software maybe trending down a bit in growth numbers, while DocuSign is probably a more stable product this year when we have comparison numbers for COVID. And you also found something digging a bit deeper into the numbers.
Yes, if you look at DocuSign, for me, we really love when gross margins are trending in the right directions. And DocuSign reached 80 plus gross margin this quarter, which is really, really impressive. So the beat on the bottom line came from top line trickling down with a stronger gross margin. And on Zoom, it was really the opposite. Really sales costs and R&D costs coming down quite substantially. And that's good if you can do it long term, but I would argue that that's really a short term fix, or maybe even that they didn't have time to recruit people and do the push they need to. But that means that the leverage in Zoom is going to be less than you see in DocuSign. So DocuSign was clearly, I would say, a stronger report than Zoom was in the details.
And finally, we also got the numbers for May of most downloaded apps. And it looks pretty similar to the last month, with TikTok being number one. It's really impressive. They're still growing over 30% year on year. I think it was 80 million downloads in May. But then on the rest of the top 5 table, you only have Facebook properties. So really strong for Facebook that we have in the portfolio. And you also have Zoom there pretty high up. And I would think that most people that are using Zoom already downloaded Zoom a year ago or half a year ago. So pretty strong that it's still being actively downloaded by so many people. So that is maybe a good sign for the usage there. Any thoughts on this, Inge?
No, I just totally agree with you, Johan. It's impressive that Zoom is up there. And in TikTok numbers, the really, really strong numbers came from Brazil. Seems like TikTok is really hitting the streets of Brazil for the moment. No, it's an interesting list. And I think now TikTok has been number one for 11 straight months in a row, which is quite amazing.
Yeah, it is. Thanks for today, everyone. See you next week.